Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Sony reported earnings recently, and this is one of the most interesting companies in the media and gaming space to me right now because I think strategically it's really well positioned. In gaming, you have PlayStation as the dominant platform, just crushing Xbox right now. In the media business, Sony is one of the few companies that has decided not to spend money on streaming, and it's more than willing to sell content to other streamers or other content platforms. And in a lot of ways, it's a leader in technology. It makes all kinds of electronic devices that we may not even know that we're using all the time. But the stock did drop after earnings, so I want to cover exactly what was announced and what to look for in the future and for the rest of the year because we did get some guidance numbers. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you like this video, check out my newsletter, Asymmetric Investing. I have a link to that in the show notes. I'm going to go right to the results. Here's a high level look at the results, and these numbers are in yen, so keep that in mind. Sales was up sharply over a year ago. That is in part due to changes to IFRS accounting standards, but you can see here that on the bottom line, things were just getting worse across the board. And operating income, net income, adjusted EBITDA, everything was down in the quarter. So this is really the thing that the market was reacting most to. Here's an operating income walk from a year ago. You can see that IFRS was actually a benefit to operating income, but financial services were down, pictures were down, and that was not offset by some strength in the music business. So that's one of the big reasons that the operating profit was down for the business overall. This table is something that Sony shows each quarter, and it really gives an idea of what each of the business segments are doing. So I'll just highlight some of the more important segments. Gaming and network services revenue was up sharply, but margins did not improve all that much. So there was a little bit of improvement in that segment. They did increase guidance, which I'll cover in a second. The music business also doing a little bit better. This should be a tailwind from price increases at Spotify. And this has really been a much more stable business as we move to streaming and subscriptions than it was in the past. So again, a little bit of strength, a little bit of growth, not crazy numbers, but still moving in the right direction. Pictures, which once again is going to be volatile, was down. Entertainment, technology, and services. This is a lot of the technology products that Sony makes. That was up slightly in the quarter. Same for imaging and sensing solutions. But here's where things really went south. Financial services revenue was up sharply, but operating income was down really sharply. This was blamed on the company's life insurance unit. So this is one of the things where Sony is a conglomerate. There's a bunch of businesses together, and there are these financial services that can be volatile depending on the quarter or time of the year. As interest rates rise, a lot of financial services companies are starting to face a number of different pressures. For Sony, it was really the insurance unit that took a hit this quarter. Most of the core businesses seem to be doing pretty well, but that was offset by financial services losses. I did want to show some of the guidance trends because I think this is interesting to look at. Sony does see improvement in guidance for the gaming business, a pretty sharp improvement in revenue, 270 billion yen. Same thing for the music business. Not huge numbers, but just a steady increase in their expected revenue and earnings for that segment. Pictures down slightly, entertainment, ET&S up slightly, and then here financial services, big revenue increase, but earnings are expected to be down for the year, and that's exactly what we saw last quarter. So kind of a mixed bag. Results on the bottom line are expected to be down slightly from a year ago, despite higher revenue. But what I'm really looking at is the strength in some of these core businesses, these top three right here: gaming, music, and movies and production pictures, as they call it. And as a group, they're generally moving in the right direction. Here's some of that same information. This is just a chart with the revenue, operating income numbers. You can see that there are steady improvements in both of those. 7% increase in sales guidance for the full year. So again, moving in the right direction. If we move down to music, again, you see similar trends, a little bit higher guidance, expecting some pretty solid growth, and the bottom line will be really good as well. The pictures business, you can see some of the weakness here. Deliveries to US television services were down versus a year ago. Also, lower sales to streaming services. This is one of the downsides of streaming services starting to cut back some of their spending. Sony is one of the businesses that sells them content. So that's one of the negatives there. And then there's some negatives related to the strike that's going on in the US right now. Overall, Sony's business is moving in the right direction, but it's not moving up and to the right in a straight line. And I think that's what we always have to keep in mind as investors. The market is typically reacting to what guidance is, what estimates were, what guidance is for the next quarter or year. But the way that I think about this business is the gaming business continues to get stronger as Sony solidifies its hold on the console market. I think that's not going anywhere anytime soon. And I don't see any disruptors unless streaming gaming really does become a big business over the next decade. In music, we're starting to see higher revenue and higher margins. I think that will only improve as we see price increases pushed across a lot of streaming services. Pictures is going to be volatile, but there could be some advantages in coming quarters as the strike wears on, and there's some opportunities to sell content to more of these streaming services. Again, long term, I think the trends are in Sony's favor, but short term, there is going to be volatility in their results. The financial services business, again, is going to be volatile. It's not core to my thesis in Sony, but it is a piece of the business that is now starting to be a drag, at least on year-over-year numbers. So something to keep in mind. Well, what did you think of the results from Sony? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. And thanks for watching, everybody. See you here next time.